Morning everybody, and welcome to this morning's economic webinar, and thank you for joining us. My name is Nathan Gallagher. I'm the State Manager for New South Wales and ACT. As the rollercoaster ride continues with the global pandemic, the fascination and the curiosity for real estate continues to grow. Over the last 3 months, our audience numbers have continued to break new ground, with July recording a new record with a unique audience of just over 12 million people. And with interest rates at the lowest levels in living history, stamp duty concessions and government stimulus extensions, there's a lot of support being pumped into the economy at the moment. And hopefully today's webinar will shed some light on what that means for all of us. The webinar, as normal, will be broken up into two sections. We'll have a slide deck presentation from Cameron Kusher. Then after that, it'll be over to you. You'll have the opportunity to ask questions online via the live Q&A chat on the bottom of your screen. And feel free to put those questions in as we're going through the slide deck, and I'll certainly do my very best to answer them at the end of the presentation. Now, to open the doors, to pull the curtain back on the latest data, the latest insights, Cameron Kusher has spent the last 2 decades in the real estate and research space. And I'm thrilled to have him here this morning to shed some light on what's going on. I'm going to hand over to you now, Cameron.
Thanks, Nathan. Thanks, everyone, for coming today. Let me just share my screen and we'll kick off. So we're covering off on New South Wales, ACT and Tasmania, and a bit of a property market update for each of those states. So we've combined a few states here, but we do have some granular information on each of those markets. Just to start, kind of echoing what Nathan just said, you know, the housing market's obviously had its challenges due to COVID-19, but we have huge volumes of stimulus. We're seeing interest rates at their lowest level on record. And the fact that they're not going to move for, the RBA is saying 3 years, I think it might actually be a bit longer than that, is going to be positive for the market. We've got the home builder stimulus in place, and state governments are adding in their own local stimulus as well, which is certainly helping the market. Sorry, I'm just going to turn my light on here. I forgot to do that. So to start off with, what I wanted to talk to first is what's happening with search volumes. And I'm going to go through New South Wales, Tasmania and ACT, but you can see that the trends are actually fairly familiar across all of them. There was this big fall away in search volumes as we went into the first round of lockdowns. For about 3 weeks, we saw quite sharp falls. And then there was the rapid rebound when people realised that we were getting things under control. We were probably going to be coming out of our homes a bit sooner than we anticipated going in, and people were starting to think about residential property, and we saw search volumes rise quite a bit. Over the last couple of months, we've seen not necessarily large falls, but we have seen a bit of a weakening of search activity. Interestingly, last week in New South Wales, you can see that there was a bounce there, but compared to last year, search volumes in New South Wales are still significantly higher than they were at the same time last year. If we look at Tasmania, a very similar story. You can see the fall away in March, the rebound happening through April and May, and then a bit of a slowdown June and July. But again, the last few weeks, you can see search volumes have started to pick up again in Tasmania as well. And again, they're significantly higher than they were at the same time last year. And then ACT, again, same sort of trends, although there hasn't been as much weakness in search volumes in ACT as we've seen evidenced in some other states. Search volumes in the ACT at the moment are more than double what they were 12 months ago. So a really strong result in that market. Now, if we break that all down into each of the states and territories, you can see here, so generally now search volumes have returned to their previous peak. Certainly in New South Wales, in Tasmania and ACT, that's the case, along with a few other states and territories there. The exceptions, of course, are Victoria, and no surprises there. A lot of that weakness has come since Victoria went back into lockdown. Search volumes are 14.7% lower than their peak. And Western Australia, which is an odd one because the Western Australian market's actually doing reasonably well. But what we believe is happening is this search data tracks searches on the for sale section of the REA website. With home builder and the stimulus that the West Australian government is going, we think that that's actually dragging eyeballs away from the for sale section of the site and towards the new home section of the site. And we are seeing very strong demand for new homes in Western Australia. If we look on a year-on-year basis, You can see that in New South Wales, search volumes are up 38% from a year ago. Tasmania are up 32%. And as I said, in the ACT, search volumes have more than doubled from where they were 12 months ago. So really strong activity right across the market. People, despite all the challenges we've got economically and health-wise, people are still keeping a very close eye on the residential property market. I'll also touch on the rental market, because we know that the rental market's a little bit challenged at the moment. And the challenges that the rental market is facing really come down to the fact that international borders are shut, and also a lot of domestic borders are shut. So people aren't migrating between states, but we're also not getting those people coming into the country. And most people that come to Australia don't already own a home, so they have to rent for a while, particularly international students. They don't, at least initially, intend on purchasing a property. And now we've got the double whammy of the federal government having announced the home builder package. And whilst the home builder package is good stimulus for the new housing sector, for the rental sector, it actually creates more challenges there than we're already facing, because home builder is dragging a lot of first home buyers into the market. And where are first home buyers coming from? They're coming from the rental market. So that creates some challenges there. But in terms of search volumes, they've actually been fairly resilient. Again, you can see the collapse through March. But generally speaking, we have been seeing the number of searches for rental properties in New South Wales trending higher. Similarly, in Tasmania, we never saw the big collapse that we saw in other states and territories. But Tasmania has had much more of a rental shortage than elsewhere. And now we can see growth returning to that market as well. And the ACT as well, not really a very severe collapse in search volumes, and they've held up quite well. So it is actually quite interesting when you consider that you have these shut borders, you have people moving from renting to home ownership, that rental search volumes are still up 14.2% from where they were a year ago. And I think that really talks to the fact that people are keeping a very close eye on the rental market. You know, once their lease is up, they know they're going to be in a good position to negotiate a cheaper rent where they are, or they have the option to move and maybe find better accommodation at a similar or cheaper price. So what I believe is happening is, even though people aren't necessarily moving yet, they are very closely watching the market to see what's available, what price adjustments are we seeing out there, and they'll continue to do that. If we look across the states, you can see in ACT, rental searches are at historic highs. They're only slightly below their historic high in New South Wales, and then most other states, they've recorded falls. But as I said, year on year, we can see some big increases in rental search activity across most states, with Victoria the one exception. So moving on to what's happening with transactions. And one way we look at this is we look at the number of properties each week that were listed on our website in the for sale section. And then those properties will move during the same week to the sold section of our site. And as you can see here, really for the last probably 10 weeks, the number of sales in New South Wales has been higher than it was at the same time last year. Prior to that, you can see sales volumes were lower, but we never really saw that big collapse in sales volumes that a lot of people were expecting to happen. So transactions were still happening, albeit that they weren't quite to the level that we were seeing previously. In New South Wales, you can see that weekly sales volumes last week were pretty much back up to their peak levels that we saw before COVID-19 in 2020. If we look at Tasmania, obviously a smaller market, so a little bit more volatile. The sales in Tasmania have certainly not been as strong as they were in other states and territories, and have generally been hanging slightly lower than what we saw last year. But remember, prices and demand was really strong last year in Tasmania. It was starting to weaken a little bit, but that market has had a very strong run over recent years. And sales are not too much different to what we've seen over the last couple of years. And then in the ACT, again, a lot smaller, or a lot fewer sales actually take place in the ACT. But you can see for a lot of the last 10 weeks, again, sales volumes have been higher than they were a year ago, and they are currently. And then if we break that down by each state and territory, you can see that Tasmania is actually the only state in the country that last week had fewer sales than it did over the same week last year, down 11.3%. You can have a look at New South Wales. Sales volumes are almost 17% higher than they were a year ago. Northern Territory, ACT, they're up 12.9% from where they were a year ago. So there's still transactions happening out there in the market. There's certainly not as many auctions taking place as we usually see, but in terms of private treaty sales, there's still quite a lot of activity in that segment of the market. One of the areas where we're seeing really strong sales activity is the vacant land side of things. And again, we think this is very much linked to the announcement of home builder. So you can see here in New South Wales, the vacant land sales are much higher than they were at the same time last year. And this is a trend that we're seeing replicated across most states and territories in the country. Now, vacant land is still a very small portion of overall sales. And again, I would highlight that this is vacant land listed on the for sale section of our site, not listed on the developer or new home section. But clearly home builder is having an impact there. The feedback we're getting from a lot of developers in New South Wales, though, is that at $750,000 cap for home builder, a lot of the stock in New South Wales and in Sydney in particular, you can't actually bring to the market for under that $750,000 price point. I remember recently talking to a major developer, and he said of all the lots we've got in Sydney, we had less than 10 that would actually be applicable for home builder once you purchase that land and built. So home builder probably not being as effective in Sydney in particular, but certainly it is having some impact on the market. I haven't shown you Tasmania and ACT here just because the sales volumes overall are so low that it's not necessarily meaningful to break it out any further than that. If we look at listings, so this is looking at metropolitan and regional listings, and this is an index of listings. So it's basically just showing you what's happening with the change. And you can see that across both metropolitan New South Wales and regional New South Wales, last week we've started to see a bit of a drop in new listings, which is unusual at this time of year, considering we're moving towards spring. You would expect that this is the time that new listings are starting to ramp up. You can see that it can be a little bit volatile on a week-to-week basis, but even still something to watch. And I think really reflects what we're seeing more broadly across the nation, that the outbreak of COVID-19 in Victoria, a smaller outbreak in Sydney, has really damaged consumer confidence and made people probably think twice about whether or not right now is the best time to be listing their property for sale. So hopefully the fact that New South Wales seems to have got its cases under control and Victoria seems to be getting the number of new cases under control will bode well for things moving forward. If we look in Tasmania, they have been trending higher in terms of new listings. Again, a smaller market, so it is a bit more volatile, but trending in the right direction in terms of new listings, showing that vendors do have the confidence. I think the challenge Tasmania is going to face is the fact that it's now saying that its domestic borders are going to be shut until at least the beginning of December. We know that a big driver of Tasmanian property over recent years has been the fact that a lot of people from mainland Australia have been looking to buy properties down in Tasmania. And if they can't actually travel to Tasmania to do that, then I think that is going to be to the detriment of the property market in that state. And then in the ACT, obviously there's not a regional part of the ACT, but you can have a look at the index here. The index has been largely flat over the last few weeks, but you can see that it has started to pick up from June. Certainly not back to normal levels, but heading in the right direction, and hopefully during spring we'll start to see more new listings coming onto the market. And then if we break that down across each of the states, I mean, you can see the impact of the lockdowns in Melbourne and not quite as severe lockdowns in Victoria. Just over the last month, new listings have fallen 60%, and they're down about 57% from where they were a year ago. A bit more mixed in each of the other states and territories. You can see in New South Wales, for example, new listings are 8.1% higher than they were a year ago. They're slightly lower in Tasmania, and they're up 10.4% across the ACT. But at a national level, the impact of the big falls in Melbourne is dragging that national figure down about 10% over the last year. One of the other things, so Another way we look at what's happening in the market is this demand index that we've built. And essentially what the demand index looks at is how people are interacting with our listing. So for every interaction someone has with a listing, we score that. So someone that would get a low score for an interaction with a listing would be someone that looks at the listing once, maybe looks at 3 photos and never comes and revisits that listing again. On the other hand, there's high engagement behaviours that we see with listings as well. And that will be someone that keeps revisiting that listing, keeps coming back and flicking through all the photos, someone that sends an inquiry off to a real estate agent, someone that saves that listing, somebody that would that email that listing to a friend. Those are more highly engaged buyers. And historically, people doing these kind of activities have been shown to be more likely to transact properties in the near future. And when we're talking about our demand index, we're looking at those highly engaged listing interactions. And you can see that, again, the COVID impact of things, there was a big fall away in listing engagement. It bounced back quite strongly through April and May and even early June. It has started to taper off in New South Wales over the over the previous few weeks, but you can see the last couple of weeks, there has actually been an uptick in that high listing engagement in New South Wales again. In Tasmania, kind of a very similar story, a fall away in March and early April, then a rebound and then tapering off. But we have started to see over the last couple of weeks, the demand index has started to point upwards again. And again, very similar shape we're seeing in ACT as well. Now, never really saw the big collapse in ACT that we saw in some other states and territories. And the rebound has been much larger in ACT than we've seen elsewhere, but people are showing a high level of engagement with property listings in that area. Pardon me. And then if we look at how this looks across each of the states, again, showing the decline from the peak and showing the year-on-year change, you can see that across most of the states, demand is much higher than it was a year ago. Nationally, it's up 31.6%. Again, you can really see the impact of those lockdowns in Victoria. The demand index has fallen 25% from its peak. Most other states and territories, the declines have been fairly minimal, and you can see in Queensland, Tasmania and Northern Territory, demand's actually at record highs currently. Another way to look at things is looking at what's happening with views per listing. So this is looking at the average number of listings that are active on the market and looking at the average number of views any of those listings would be getting. So for New South Wales, Tasmania and ACT, for for sale listings, you can see that generally they're getting quite a few eyeballs in each of those states, the views per listing, especially compared to some of the other states and territories across the country. If we have a look at these 3 charts, this gives us a better idea of the average number of views per listing. So Tasmania is out in front with just over 1,600 views per listing. New South Wales, they're at about 1,450 views per listing, and then ACT just over 1,200 views per listing. So certainly among the strongest in terms of how many eyeballs are coming to these listings. And then the second chart looks at where we were in February, which was really before the impact of COVID, and then where we are in July, which is the latest data we've seen. And you can see that views per listing in ACT have recorded the greatest increase, up almost 51%. In Northern Territory, they're up about 29%, and in New South Wales, they're up 26%. And then on a year-on-year basis, you can also see how much of an increase there has been in views per listing, particularly in the ACT, but also New South Wales and Tasmania have seen quite large increases as well. So let's break that down into the individual regions. So firstly, starting with Sydney, this is looking at the Sydney SA4 regions. Firstly, on the left, and I'll give you a little while to kind of read these charts, but you can see the left is all of the SA4 regions, and that's the average views per listing as at July. So Northern Beaches, eastern suburbs, Sutherland way out in front, the southwest of Sydney really lagging behind, and the outer southwest seeing relatively lower views per listing. But then on the right, we've got the year-on-year change in views per listing. And you can see that it's the outer Western Blue Mountains, which has seen the greatest growth, 75% increase in views per listing over the last 12 months. The Central Coast also seeing a big increase, 65.6%. Then we come to areas like Ryde, for example, only a 2.8% increase. You can see there that Parramatta's only seen a 13.5% increase over that period of time as well. So very much mixed. I guess positive that there's growth right across the city, but certainly we are seeing growth in eyeballs much more prevalent in certain regions as opposed to others. If we then look at regional New South Wales, again, same thing, the views on the left and the change on the right. So in terms of views, Illawarra stands out as getting the most views, followed by Newcastle and then the Southern Highlands. But the Southern Highlands is seeing the greatest growth. Views per listing over the last 12 months have jumped 91%, followed by Richmond Tweed, where they're up more than 3/4. And then you can see Coffs Harbour and Grafton, Newcastle, Lake Macquarie, and Illawarra seeing some pretty big increases as well. So generally speaking, the year-on-year change in regional New South Wales for views per listing has been much stronger than it has been in Sydney. But keep in mind that overall views per listing are generally lower in regional markets than capital cities. Now, if we look at Tasmania, so we don't get as granular in Tasmania looking at the SA4s. We just doesn't get broken down that deeply. But you can see here that Hobart overwhelmingly gets the highest number of views per listing, followed by Launceston and the Northeast. In terms of the year-on-year growth, though, it looks like people are starting to avert their attention away from Hobart and starting to take more views towards some of the more regional markets. And I guess that's not really a surprise when you consider what's happened with pricing in Hobart, that it's become so expensive that the thing that was driving a lot of people to go and buy properties in Hobart is now causing them to go elsewhere, because the price of a property in Hobart's now more expensive than Perth, Adelaide. It's pretty similar to the price of housing in Brisbane. It doesn't really have that affordability advantage that it used to have. And then the rental market, and I think I haven't touched too much on rents overall, but it is important to consider because we know that there's a lot of challenges facing the rental market, as I've already discussed, but also investors, obviously, I think are going to be doing the sums and maybe thinking about whether or not to hold on to their properties. And particularly if some investors have lost their job, then I think we could see some more investment properties coming up for sale over the next few months. So having a look at views per rental listing, in terms of New South Wales, actually quite a low number of views per listing compared to other states, relatively low in ACT as well, and Tasmania on the higher side. Again, from February to July, each of the three states we're focused on have seen an increase. ACT the biggest of that, followed by Tasmania and then New South Wales. And then year on year, views per listing in New South Wales for rental properties is actually slightly lower. It's also lower in Tasmania, but it has increased in the ACT. And how does that look across the regions? Quite interesting, really, because you can really see, even though we're looking at July last year to July this year, the big impact of COVID on the rental market. Views per listing in the inner areas of Sydney have really dropped quite dramatically from where they were 12 months ago. You can see City and Inner South down 17%, the Inner Southwest down 18.5%, Inner West down 21%, North Sydney and Hornsby down 11%. And then have a look at some of the more lifestyle areas. So look at the Outer West and the Blue Mountains up 86.5%, Central Coast up 60%. So perhaps people are now thinking about moving to these areas, but then go and try renting there for the next 6 to 12 months before they make that long-term commitment. But pretty clear. And this is something we're seeing in other states as well. The inner city is really struggling in terms of the year-on-year change in views per rental listing, and the outer areas that have those more lifestyle factors really seeing quite a big jump. And then if we look in the regional markets, again, look at the Southern Highlands, almost a 70% increase in views per listing for rental properties in Shoalhaven, Southern Highlands, a 50% increase in the mid-north coast. Illawarra is seeing quite a large increase as well, so very mixed there. In terms of Tasmania, so again, Hobart does see the highest number of views per listing, but they've dropped 33% over the last 12 months. Launceston's also seen a bit of a drop down, 13.9%, but not that they're huge rental markets, but you can see that views per rental listing in the western, northwest, and the southeast have actually risen over the last year. Then turning very quickly to property prices, and I guess the one thing I take away from what we were seeing with COVID was that the market was going into this COVID period with a level of momentum. Prices were starting to increase after they'd fallen for a few years. Obviously, COVID's a pretty big pothole, but I think I'm still reasonably confident that coming out of COVID, demand is going to be quite strong for property. And I think don't underestimate the fact that a lot of people have been sitting at home for the last 5 months, really recognising every little thing that's wrong with their property. And now once we get through COVID, once everything starts to go back to a bit more normal, they're going to be looking to buy or sell or both properties that they own. So having a look across the individual regions, again, this is looking at the quarterly change and the annual change across New South Wales SA4 regions. You can see, again, a bit of weakness prevalent in the inner areas of Sydney over the last quarter. But generally speaking, we're not seeing a big fall away in prices across the Sydney market. And the regional markets generally are holding up much better. We've actually seen growth in a lot of those markets over the last 3 months. So then, just for my final couple of slides, I think there's two really important things outside of the low interest rates that we need to consider. And the first one is consumer confidence. When COVID really hit and confidence dropped, it fell to its lowest ever level on record. Now, the data that they have here goes all the way back to 1974. You can see that confidence was lower than it was during the GFC. I think the other point to raise here is that confidence was already weakening before COVID hit. We'd had the bushfires, but even since last year, we can see that there had been weakness in consumer confidence, and it had been trending lower. Fast forward to July this year, and I have to admit I was pretty surprised at how well confidence had bounced back. You know, we were doing very well with the outbreaks, low case numbers. And then unfortunately, Victoria happened, and it's really put a dampener on confidence right across the country. And confidence fell for 7 consecutive weeks. You can see it got back to levels we last saw during the depths of the global financial crisis. The good news was that last week, confidence actually rebounded 2.4%. I think that speaks to the fact that new case numbers in Victoria started to come down. There was a lot of concern about a rising outbreak in New South Wales that hasn't come to fruition, and it's good to see a rebound in confidence. But I think overall, consumer confidence is going to be really important for this recovery. People want to know that they're going to have a job, that they're going to be healthy if they're going to go and spend, in Sydney, $1 million on a house. So recovering consumer confidence is really important for the market. And so too is business confidence. And again, you can see the V shape there. This is the latest data from National Australia Bank. But what I would highlight here is that the last survey they did for July actually predated the lockdowns that we saw in Victoria. So it's reasonable to think that business confidence and business conditions are going to weaken again the next time we get this release. But again, getting businesses back up and running, people back into offices, people back out spending money in shops, and getting things back to as normal as possible is going to be vital, because a big driver of how well we do economically is going to be what happens with the unemployment rate. And currently, the Reserve Bank's expecting an unemployment rate of 10%, and they're expecting that's still going to be above 7% by the time the end of 2022 comes around. So getting people back in jobs should be the number one priority. And that's it from me. I'm going to hand you back to Nathan to manage the Q&A section of the event today. But before we do that, I'm just going to put up a poll, and we'd really love it if you could answer the question on the poll.
Thanks, Cameron. So just jump onto the poll and give us your feedback as we do that. I might cut to a couple of questions, Cam, that we'll put on the when people registered. And a question here: what percentage? Not too sure whether you know this one, but what percentage of the real estate market in New South Wales comes from investors in China, and with the fallout of the relationship in China, will this impact the real estate market in New South Wales?
I don't have that percentage, but it's definitely been a growing percentage of the market, and that's definitely a risk. You hear very different stories. Some people listen to the Chinese government, some people don't listen to the Chinese government. So who really knows what to believe? But I certainly think Chinese hunger for our property is probably, at least over the next couple of years, not going to be as strong as we've seen in the past, and that is going to have an impact on the market, because we know that Chinese buyers have been a big driver, particularly of a lot of new projects built by Chinese developers. So it is going to be a challenge.
Cool. For people online, you have the opportunity to ask any question. If you do, just jump onto the Q&A and punch your questions in there. Another question, Cameron, there seems to be a real natural migration out of the metro areas to regional. In your opinion, what's driving that?
I think it's the fact that people have always been skeptical of working from home, but now we've kind of proved that we could do that. And I think a lot of businesses, if they want to keep their talent, are not going to have a choice but to offer some level of flexibility. In saying that, I think that generally people are still going to have to be reasonably close to an office. I don't think they're going to just say to everyone, oh, you know what, you can work from home 5 days a week and you never have to turn up to the office. I still think there's going to be an expectation. But given that, I think in Sydney, for example, I think that that's an opportunity for places like the Southern Highlands, and we've seen that views per listing are up significantly there. Obviously for Wollongong, Central Coast of Sydney, it's the most affordable area of Sydney. So that area, and Newcastle maybe is a little bit of a stretch to try and travel from Newcastle into Sydney. But I also think some of the other capital cities. So instead of having to base themselves in Sydney or Melbourne for these big businesses, maybe people are given the flexibility to work in some of the smaller offices. So potentially Adelaide, Hobart, Brisbane can really capitalise, or Southeast Queensland as a whole can capitalise on this as well, because you're only an hour flight away from Sydney from any of those places. You're only an hour and a half, 2 hours flight from Melbourne. It's certainly very doable if you need to go down for 1 or 2 days a week. And obviously the cost of housing in those areas is a lot cheaper. But generally speaking, I think if you're going to be in the same state, you're still going to need to be reasonably close to the capital city. And if you're going to go to another state, you need to be a reasonable flight time from there. So places like the Gold Coast and Sunshine Coast have direct flights. They could certainly benefit from that. Newcastle has some direct flights, so it could benefit maybe from someone wanting to move from Melbourne. But I don't think it's going to be, everyone picking up their stuff and moving to places like Orange, or everyone picking up and moving to really remote communities. I don't think that's going to happen.
Question here from Charlie. How is the outlook for the property market over the next quarter in Sydney? And I guess from me, I have this question, Cameron, will the consent for first home buyers with stamp duty have any impact on that?
It certainly will. The feedback we've got from developers, as I said, was that prices under 750, it was very difficult to bring things in for home builder under that price point. But the developers are saying just that $50,000 additionally up to $800,000 is really helping the market. I guess for the audience here, which is largely residential salespeople and principals, it's difficult for you guys to capitalize on that, because the developers are the ones selling that. And we definitely know that demand for new homes on our website has been really strong over the last 3 or 4 months. It was actually starting before Home Builder was ever announced, but Home Builder certainly supercharged things. In saying that though, if people can't get someone to come and rent these properties that are moving out, that renters are moving out of as they go and buy their own home, maybe there's an opportunity to get those listings onto the market of those investment properties that people now want to leave. The banks have extended their mortgage holidays, but I think there's going to be some tough conversations with banks saying, look, you need to be realistic about this. Your job's not coming back, and you need to think about selling your properties. So I think there's going to be some of those conversations going on. And I would expect in Sydney that listings will rise through spring. I don't think it's going to be a typical spring selling season anywhere in the country, but I think that what's happening with the virus, the fact that we are slowly starting to get back to normal pretty much everywhere outside of Victoria, people will be more prepared to go and buy and sell properties over the next few months.
There's been a prediction that we'll see between 5 to 10% drop in sales volumes over the coming months. Do you see this happening in regional New South Wales?
I really don't. I mean, look at the data that we've presented here. We're actually seeing the sales volumes are higher than they were at the same time last year. I think everyone's really underestimating the stimulus of the lowest interest rates we've ever seen. I mean, you can go get a 3-year fixed rate as an owner-occupier at the moment for about 2.25%. That's dirt cheap, really, in terms of your borrowing costs. And we know that historically, when interest rates are cut, demand for housing increases. Now, obviously, interest rates were cut about 4 months ago now. We are in the first recession in 30 years, but there's a lot of people that haven't lost their job at the moment. And there's a lot of people that can't go and spend money like they used to. They can't go and spend $15,000, $20,000 on an overseas holiday. If you're in New South Wales or Victoria, you can't even go and have an interstate holiday at the moment. So don't underestimate, and people aren't going out. They're not catching public transport every day to work. They're not doing all these things. So there is a cohort of people that actually do have a lot more money now than they usually would because they just can't spend it like they usually do. And maybe they start to think about, hey, let's go and buy a new home. Let's go and buy my first home. So I think that sales volumes are actually going to be reasonably strong.
What impact will the disruption caused by COVID have on the rental seasonality long term? Will the peak still be around January, March period? And how much will this usual pattern change?
I think it still will be, just because a lot of leases are obviously 12 months and they were signed last January and January to March. So they'll come up for renegotiation then. But clearly when it comes to January, March, there's a chance that there's not going to be international students back driving a lot of that demand. So I saw in the paper yesterday, they talk about trialling getting international students back in South Australia, I think, which to me, I'm surprised there's not been more of a focus on that, because if someone's coming to study for the next 2 or 3 years at a university, what's a 14-day quarantine at the start of when you come to Australia if you're not going to go back home anytime soon and you're here to study? But in terms of the rental market, I mean, I think the rental market is going to have some challenges. You are going to have less demand. We are pulling first home buyers out of the rental market at the moment and getting them into their first homes. So prices have already fallen, and I think it's going to be a long, slow recovery in the rental market, unfortunately. In saying that, if you can actually find a really good rental property that someone really wants to rent, property is one of the only things giving you actual real returns. I mean, you look at safe asset classes at the moment, cash rates at 0.25%, bonds are paying you nothing. Even if your net yield on a residential property is, say, 3%, it's pretty hard to find a 3% pretty much guaranteed return anywhere at the moment, given how low interest rates are.
Final question, and this is the million-dollar question, Cameron, probably on everyone's lips, that when all this stimulation and all this support and all this help runs out in December, March next year, do you think that's going to change property prices? Do you think it's going to shift the landscape dramatically, or do you think there'll be a relatively consistent transition off the back of these stimulus packages?
I certainly hope. In terms of the new home market, I think unless there's further stimulus, that's going to be a real challenge, because ultimately what drives new housing is migration, and people that aren't yet citizens if they want to buy a property, have to generally buy something brand new. So that's a big driver of the new housing sector, and obviously first home buyers and investors. Things aren't looking too great for investors at the moment, and first home buyers, a lot of the demand for the next few years is actually being pulled forward at the moment because home builder is available. So I think that the new housing sector does have some challenges if there is an additional stimulus coming in 2021. In terms of the broader market, I mean, The original plan was to expire those mortgage holidays at the end of September. They've extended it out to January. But I do think that the banks are going to start having some tough discussions with customers and saying that, hey, we can give you another 4 months, but the reality is your job's not looking very likely to come back by January next year. You probably need to consider selling this property. So hopefully some of that does smooth things out over the next kind of 4 to 6 months. But I think, and I think the other point is, the more people talk about this cliff and the challenges with this cliff, the more pressure there's going to be on the government to actually provide additional support to make sure. I mean, keep in mind, the government doesn't want the housing market to collapse, and whether that's a Labor government or a Liberal government, neither of them want that. So they're going to do as much as they possibly can to smooth this out and ride things through. But in saying that, banks can't just keep delaying mortgage repayments forever. So there is going to be some pressure from the banks for these people to either start paying back their mortgage or sell their property.
Well, Cameron, you've done a good job. We've got no more questions. I think you've covered everything for the people online. There was a few requests for this to be sent to you. Just for context, this actual webinar has been recorded and it will be published on our Agent Marketing Centre, our AMC, shortly. So if you want to grab it and have another look at it or replay it, it will be published up on the AMC soon. For everyone online, thank you for jumping on, tuning in on behalf of Cameron, on behalf of myself and the whole team at REA. Thank you for coming on, and I hope it was insightful, answered a few questions, and enjoy the rest of your day. Bye-bye.
Thanks, everyone.